Good evening, everyone. This is Wayne, and this is a special trade report for Friday, April 6th, 2018. Well, after a unknown binary event and a known binary event, the market made its decision to take a dip, and it really took the plunge. Stay tuned to find out more. Greetings, everyone, and welcome to a Friday edition of the Trade Report, which is more the exception than the rule. But as of late, I have been doing more Friday trade reports, and here we are again. And thank you so much for spending your Friday with me as we go over the trade report and the action in the market. As you can see, I still have my TradeAlerts.com, letting the market come to us splash screen up, and I did want to kind of do a reveal, but in the great scheme of things, it really doesn't matter. So um, I'll just go ahead and dive right in, kind of keeping the same dip and plunge kind of scenario going here. Um, Today was a rough day in the financial markets. Overnight, and when I say overnight, it actually began last evening early in the Pacific time zone. But you can see, let me go ahead and expand this just a little bit more so we can take a look at this a little bit more appropriately here. So as you recall, last evening when I was doing the trade report, I said I don't really expect a lot of overnight action. In fact, I really expect price to remain in an extremely tight trading range. And I can't remember if I actually said barring a binary event, but I usually do say that. And if I didn't say that, then I was remiss in not saying that. But I was focused on the known binary event of the job number this morning at 5:30 a.m. Pacific time, which was nothing in comparison to what we saw last night after a surprise announcement for $100 billion more of tariffs that will be levied against China. And the market definitely reacted to that. And we dumped just as if we were trading a regular open session. Markets recovered. They decided that, it was a lot of posturing. There was a lot of energy associated with it that was very much like the previous announcement. It was merely an announcement. There wasn't anything particular in the works. And so there seemed to be a softening of the blow, if you will. Got a little bit of selling, and then we kind of bounced around a little bit a couple of hours before the open. And then we went to the upside after the US stock market opened. But after the opportunity, if you will, to look at all of the information and hear from a few market pundits, some financial folks, if you will, who were consulted about the entire spectrum of possibilities and dynamics associated with this, the markets just decided, you know what, it really isn't something we're that happy about. We don't want to go into the weekend with any long positions, so we're just going to kind of give it up here. And the market really did fly to the downside. The Dow at one point was over 700 points lower. The Dow closed down 572 points ultimately. And let's go ahead and just kind of review all of the indexes. The S&P closed down 58 points. The NASDAQ closed down 161 points. And the Russell closed down just under 30 points. So this was a very rough trading day. The overall week was very tumultuous, very volatile. And, I'm stating the obvious, but at the same time, these are the kinds of times where unpredictability and looking at the market from the standpoint of how do you involve yourself in a market like this? Can you involve yourself? Should you involve yourself? And I'll answer the last question first. No, you should be in cash. this market, this market could go absolutely, you know, it could just absolutely tank. We could open up Monday morning and find ourselves down another 500 to 1,000 points in the Dow. That is a possibility, and it's not an outlandish possibility. We could also open up on Monday and go 500 to 1,000 points higher. There's just no way to know what's on the agenda. I will say, however, from a 50,000 foot level view, we do have to look at one thing in particular as it relates to this market, and that is Monday begins earnings season. And there are a lot of positive comments out there as it relates to the companies that are going to be reporting earnings starting next week. Now, there have been some earnings already, but they haven't been companies that are real market movers. But next week we begin in earnest having some earnings reports from companies that can make a difference. And it is widely expected that those companies will report positive earnings. So obviously the bulls have their fingers crossed. The bears have their fingers crossed too, but for a very different reason. But this market is still kind of teetering. It is totally unsure of where it's at and where it's going. And so on a daily basis, it trades on the impetus and the information and the stimuli that it's presented. And it is just absolutely getting twirled and whirled around to the degree that even long-term market pundits are saying things like, I've never seen a market this volatile, or I haven't seen a market this volatile since the crash of 1987. And if you read my morning report, my pre-market report, you'll I alluded to that in there as well. So at any rate, we really don't have charts to look at per se. I mean, I always want to show you Amazon because it's important to show you, in my opinion, what happened to the market leader today. Market leading stocks tend to be relied upon for substantive foundational support. And you can see that Amazon actually did hang in there relatively well. Now, Amazon did close down $46.50, and that's a big move. But when you have the market dumping as much as it dumped today, a 46-point move to the downside really wasn't that bad. And I'm not trying to, what's the term, make a silk purse out of a sow's ear, or lemonade out of lemons for that matter. But I will tell you that the fact that Amazon was unable to go below $1,400 a share today is actually bullish. And I bought some Amazon today. I also bought some DIA, which is the Dow ETF, and I also bought some Boeing, and that's the last chart. Well, we're gonna of course show you the VIX. Let's get Boeing up here. So I guess my original comment about not really having charts to show you was inaccurate. I do want to review what I told you yesterday about Boeing. I was looking for Boeing, as you recall, once it broke this trend line, to come down and test this trend line and then bounce up, and that would be my buy signal. Well, looky there. I got exactly what I was asking for, and I did exactly what I intended to do. I bought Boeing today. So, this is how you trade the markets. Even when there's quote unquote blood in the streets, the markets are just selling like crazy and everyone's afraid, and everyone thinks the market's going to crash, and it might. I'm not discounting that possibility, but you do have to kind of cut through the, pardon my French, you really have to cut through the crap. And you have to look at what makes sense from a technical standpoint, a fundamental standpoint, and if those technical and fundamental dynamics align with your trading plan, and ultimately whatever trade thesis you might have associated with the trade ideas that you are looking at. And today, Boeing was a classic, and so I bought it. Bottom line. So I told you I bought DIA as well, and I bought DIA because it, in my opinion, was oversold. And when I say oversold, I mean it came down and it just wouldn't go down any further. And yet it just seemed like it was wondering why it was down so low as well. And I know I personify the markets periodically, but this is all part of how I assess market conditions. I utilize my intuition. I look at the energy of the markets. I interpret the sentiment of the market and also include, my interpretation of the momentum associated with the market and the price action. And these are all elements that I teach in my coaching, and I feel are imperative to even, before you even begin to consider trading, that you have at least a basic understanding of. So at any rate, I bought the Dow ETF today, and as you can see, it had a nice bounce up from the low. And again, I am not saying that I got this right, but what I am saying is this market has not found those February lows yet. So I am just kind of looking at this market and saying, all right, get it out of your system. Earnings are coming, and it's apparent you really don't want to be down here, but yet you are, because circumstances beyond your control, i.e., announcements about tariffs and trade wars and blah blah blah, and then of course, just to add a little icing to the cake today, the new Fed chair Powell came on and said, yes, we're looking at possibly a few additional interest rate hikes over the next couple of years. And, you just, you end up in cycles of information that all seem to kind of overlap and kind of layer on top of each other to ultimately, bring a market to a place where it just doesn't stand a chance, but yet it still fights. And today the market fought. And in my opinion, there was a minor bullish case to the close, because the close actually gave us a little bit of an up move. And that up move helped us close, or helped us get above 2603, which was my line in the sand for whether or not this market would have an opportunity or a chance on Monday to actually go higher. I felt as if it closed below 2603, then it would be a problem. Above 2603, and there's some very significant support there. And you can see where it closed at 2605. So there we go. Now we did have a deep dive below 2603. In fact, we went down as far as 2584.15. So we went down about almost 20 points lower than 2603, but we got bought right back up again. So my thesis for Monday is, given the fact that it's the beginning of earnings season and we closed at 2605 today, and the fact that we still, even after a day like today where we just absolutely collapsed and the overnight session was just horrible as far as the information that was shared. And I haven't said anything yet about the job number, which is what my trade report last night was basically all hinging upon as it relates to what I thought the market may or may not do. This was the job number time right here, and it's like, really? Oh, sorry, that's not accurate. It's right here. This is the job report. It's like, okay, so that's a whole lot of nothing, obviously, compared to what had transpired previous to that. If this had been a standalone move compared to what I thought was going to happen overnight, which was a very, very narrow trading range, then it would be a little bit of something. But it was just, taken in stride, not a whole heck of a lot. And, we just kind of did what I just described we did during the regular session. And, that's where we are. So we've got about 48 hours of rest and relaxation over the weekend until we open back up again on Sunday. I will use the same phraseology that I used last night. So what do I think is going to happen on Monday? Honestly, I don't know what's going to happen on Monday. I think there is a very minor bias to the upside on Monday, just ever so slightly because of earnings and because we closed above 2603. Those are not those are not criteria that I would hang my hat on. And the positions that I am in and bought today, based on the market moving so much lower, are very small positions. So, you know, you have to be able to buy when it's uncomfortable, and it just looks like the end is near. And that's what today looked like. So at any rate, that's where we are. The last chart that I want to show you is the VIX. And the VIX had a very interesting day today. Um, so as I said yesterday, it looked like the VIX was going to go lower, and we were going to touch 1820. Well, wait a minute. What line is that? Let me get that number. 1825. So the VIX actually did go lower today, and its low was 1860, but its high was 2312. And so a $5 or 5 point trading range in a $20 instrument is, a 25% range, for the overall value of the instrument. And you can see we also ended the day with a very wide body doji. So there is a little bit of indecision here. It did close higher, so that means the market, and we know the market closed lower, but we do know there was some pressure on the market. But for as much as this market moved down today, and this is where we have to look at the comparative value of what the market did and how the VIX reacted or registered its associated value, again, according and compared to the broader market. And the VIX really didn't put in a big push today. It was kind of like, okay, if I have to, I will. So it really didn't get on its horse and move with the rest of the market. And yes, as I said, it did go higher, and that's predominantly because the market ended lower. But really, the VIX kind of underperformed, I guess is the best way to put it. So that's the final piece, which is totally non-definitive as it relates to my upward bias for Monday. I'm not even utilizing this piece, this metric for that purpose, but I'm just drawing a reference to it because I'm always looking at volatility, as you know, and I always want to see what it's done in relationship to the broader market. And it just, again, I have to use the term underperformed. So anyway, so that's where we're at. Just, really a wild week this week. If we take a look at the week as a whole, let's see, we got Friday, Thursday, Wednesday, Tuesday, Monday. So if we just kind of take a real quick peek at that and just kind of remember, and Monday, big down day. Tuesday, kind of a down. It was an up day, but it was a choppy day. Went way down overnight. That was the first trade tariff talk. And then Wednesday, holy moly, just that beast of a move to the upside, and then continuation in the broader or in the extended session. And then we kind of chopped around, but still closed higher yesterday. And then we got the surprise announcement last night, and wham! But we still recovered from it. A little choppy into the opened higher, and a total collapse. So we did close today a little bit higher. Well, let's see, did we close higher for the week? No, we didn't. So we closed lower on the week, but we closed off of the lows of the week, which would be down here. And I was thinking we might have been able to get there today based on this move that just started picking up speed. But as I said, we got some buyers that came in at the close and kind of saved the day, if you will. So a lot of things still kind of moving and grooving, and not really in a position where we can make anything definitive in terms of our predictions or approaches to having good ideas about what this market's going to do next. So we just wait. We let the market reveal itself to us. And that is also a skill, if you will. So will we retest the lows of this week on Monday? Will we retest the highs of this week on Monday? Remains to be seen. 48 hours from now, 48 hours from now, it will all be revealed and we will know more. So with that, trade safe, trade what you see, good night, and good trading.